Luna Classic is pumping, but it's now the right time to buy. Today, I'm going to show you how not to get burnt in detail because there's a particular pattern. If you can see it, you're going to be 2 steps ahead of the market, so you can be on the winning side. So if you like today's content, like, subscribe, hit the bell notification. Let's dive into Terra Luna Classic. So Terra is here 2.0. Now, if you're not aware of it, it went through a massive crisis, algorithmic failure, and the price tanked, right? We want to be aware of this because most exchanges are now only showing the recent price, but you want to know it was over $100 and it tanked, right? This was psychology playing out, and then this was pure algorithmic failure. We want to be really, really aware of that. So what we're going to look at today is on CoinMarketCap. We're going to go into a trading view data, but I want to just show you this. This price data here is what we're going to focus on today. The recent price data, there's a particular psychology playing out. And if you can spot this, more often than not, it will play out like we're going to unfold with pure technical analysis. So just know, so there's been price data for quite a while with Terra Luna. We're talking about, when was this? This was 2019. But on exchanges, the data will now only show from roughly early June thereabouts. But this is the price action. We can see it's pumping, right? And you're feeling the fear, you're feeling the greed, the emotions are taking over because that was a crazy move, right? From here to here. And now, is it just going to keep going up, or is something else going to happen? And that's what we're going to talk about today. I'm going to do a detailed analysis. And what I'm seeing here is actually what I saw with Dogecoin when I did a Dogecoin video around a year ago. And it's classic Elliott wave and Fibonacci price and pattern behavior, where we're likely going to see the price do a big correction. And I'm going to show you exactly how. But before I do, just know everything I cover today, you're going to be able to download the chart for free. And just click on the link below and you'll see all the charts that I have. I'm going to add Luna Classic to this set. So all the analysis that we do with Luna Classic, it's Luna C, right? Luna C or LUNC, LUNC, which is Luna Classic. All right, so markets move in 5s and 3s, right? Do you see a 5-wave pattern? Let me make it easier for you. Can you see a 5-wave move from the upside, this being the beginning of the move down here, this being a top, a bottom, a top, a bottom, and then potentially another top? So let me draw this out for you. And you'll see this time and time again. I'm going to keep it on the closing data, just sometimes easier to see. We've got this move up, a move down. It's called a wave 1, wave 2. Then we have this crazy impulsive wave 3. Wave 3s tend to be the most impulsive, aggressive buying behavior. Then you have a profit-taking wave, and wave 4 down here is the low. And now it looks like we're forming a wave 5. We want to be on high alert for this. So if you've bought Luna Classic anywhere down here, you want to be getting ready to take profits. At least become risk-free. If you're a 2x, 3x, 4x up, get your money off the table, because this is likely to occur, what I'm about to show you. More often than not, we just basically stack the probabilities in our favor. So it's probabilities, never certainties, but this is the most kind of predictable thing that you can do with market analysis. So let me just draw it out like this. So what I'm going to do next, so you can see the 5-wave count. What normally comes after a strong 5-wave, I don't think it's complete, because I'm going to show you where it's likely to get to, but be on high alert. We're on panic buying mode. We're on hopium mode. This is the hopium wave. Wave 5 is literally, I don't want to miss out, fear of missing out, greed's taking over. This is the hopium wave. What typically occurs after hopium? A big correction. And that's what I'm going to talk about today in a logical, mechanical, non-emotional way. So after a 5-wave sequence, I'm just going to add some Fibonacci ratios. So what I'm going to do is measure herd psychology, mass herd crowd psychology. So more often than not, I'm going to take these extremes. If we measure the beginning of the move, as in the low, to this wave 3 high, and from this wave 4 low, I'm going to take it as this wave 4 low. Most common will be 62% and 100%. I'm going to use the 100% ratio mainly because most wave 5s exceed wave 3s. So wave 5 tend to exceed wave 3. So we can anticipate with quite a bit of confidence that this high is likely to get exceeded. So we can even remove this to keep it even clearer. So we want to be on high alert for the price target of 0.0002, right? That's a really crucial number when it comes to Lunar C, as in Lunar Classic, right? This here. I'm also going to do something called an external retracement. This is really reliable, really reliable. More often than not, you'll see markets hit this almost like magic, like a little magnet, and price just reaches these ratios, 1.618 to 1.272. So I'm just going to scroll this down a bit, and this is the range over here. We can rely on this, and there's a very high probability we're going to see Lunar Classic go into the range of, and again, let's just quote these numbers as written, 0.00019 to 0.0002, right? Be on high alert. Okay, is there anything else? We could do some other analysis, but the main thing to keep in mind is that we're in the hopium wave. And sometimes it will overextend. Sometimes it will overextend. I mean, it's not common that it overextends, but because of the hype and the FOMO and the nature of crypto, don't be overly surprised if we smash this number, and it might even explode to the next Fibonacci ratio, which is 1.618. Now, this is uncommon, but with the noise and the news and the fear, uncertainty, and doubt, and the fear of missing out, those human emotions, sometimes wave 5, this is more common with the commodity markets like wheat and oil, and because a seasonal kind of nature of that market, where wave 5 tend to be the impulsive wave. So be on high alert. If you can get risk-free over here, do. If it pumps to this, take profits. Do not be buying over here, because this is the worst time to be buying, especially after a 5-wave move. That's just stacking the probabilities in our favor. All right, so now let's just do two more things. Let's just make a mini forecast, and let's just say the price does reach this level here. What will typically occur? This is what you want to anticipate and prepare for. They say success is when preparation meets opportunity, right? So anticipation. What typically occurs, we don't know where the top's going to be, but we know it's likely to be soon, right? It's likely to be soon. Just hearing the news and everything else and the way people are talking, it may, if it's as steep as this, look how explosive this is. If this is anything like that and it breaks above here, there'll be a lot of hopium. And sometimes I can drive the price, because you need to understand what drives price. Buying drives price. Short-term voting, which is people buying the token, which drives up price. But just imagine how people down here are feeling. Well, they're going to be significantly up, so they're going to take profits. So you want to be prepared for a typical ABC correction. So let's just assume for a second, let's say this date, which is practically next 3 days or so, we hit a high. This is a daily chart. What typically will occur, and it will be a better time to buy than today, in my opinion, based on technicals, is most corrections take 38 to 62% time retracement to occur. I know that's quite detailed, but I'm just going to give you the time and the price. I'm going to do a Fibonacci price ratio. Now, we don't know what the high is yet, but let's just assume for a second it's hit to give us an indicative feel of what's very likely to occur. Most correction will come to 50, 62, and 78.6%. So then this gives us a nice feel for once the high is met, this is likely to occur, and we want to be on high alert for this. This will be a much safer time to buy, because typically what happens in markets, and you'll see this time and time again, whether it's Bitcoin, Ethereum, Dogecoin, whether it's Binance Coin, Solana, and you'll see these patterns time and time again, is you'll see it move in a 5-wave movement to the upside, and you'll see it like this, nice bullish movement. Then you'll see some type of 3-wave, most common is 3-wave corrections. There are other types of corrections. And if this occurs like this over the coming days and weeks, then what typically occurs next is the next level of impulse growth. And it tends to be explosive. Similar to how you saw this wave 3 over here, tends to be a bigger degree wave 3, which tends to be very explosive. So today, like, just be on high alert, be careful. If you're in profit, lock in some of those. If you can get risk-free, do that. If you're trading it and you're long, tighten your stop losses. I wouldn't have my stop loss anywhere below this point. And as the market moves up, I'll be moving on swing highs and trailing the stop loss, because if it reaches this point, yeah, it's going to be topping out. It's probably going to overextend. Just looking at how the news is and knowing human psychology, and we've seen this happen with Dogecoin. I should probably show you what happened with Dogecoin. Let me show you what happened with Dogecoin. This is one of my first ever videos on YouTube, and I'll show you this. This was like a year ago, right? So Dogecoin, let me just pull this up, because you'll see this. It's almost the exact same pattern, and it's the exact same psychology playing out. So let's just load up. I'll show it on CoinMarketCap, but it's the pattern that I'm going to make reference to. It's taking a bit of a while. Come on, Dogecoin. All right, it's coming. Oh, yeah, here we go. So it's going to show all the data. And what we saw with Dogecoin, and I did a video on this a while ago. I'm going to do it like so. Let me just draw in like so. All right, so with Dogecoin, this was around April last year. It was on a bigger degree time frame, but what we saw was this initial move up, some correction, quite impulsive correction, and then a massive impulse. This is the hopium wave. And I did this video, it was like April 2021, and I said, dodge the Dogecoin bullet, and you should be getting ready to take profits here. And literally, it was pretty much the top that we did the video on, to say, look, when you see this wave 1, 2, 3, 4, and when the angle of wave 5 is like this, is what we're seeing similar to Luna. What typically occurs is a big correction, normally 3 waves. And then if we just look at what happened with Dogecoin, this is what you should anticipate with Luna. We just had this big correction, right? Massive correction. So when we look at that, look at the comparison with Luna. I know it's different time frames and everything else, but the emotions are the same, right? I'm just gonna do it like so. So you can really, I want to emphasize this point. Doesn't mean it's guaranteed to happen. It could just explode, but more often than not, when you see a 5-wave move like this, typically what follows is a 3-wave correction. So yeah, that's my take on Luna. Some of my community was asking me about Luna. See, what do I think? I like, okay, look, download the chart, by the way. I'm going to upload it later on today, so it should be here by the time you see this. And also, I'm going to read a quote from my book. You can also get my book for free as well now. Download it for free. I'm going to read a quote, because it's important to note that we're playing a game of crypto tennis, right? Where there's winners and losers. It's a zero-sum game, which means for people to make money, others have to lose money. And 10% normally end up making most of the money. There's around 10, 20% that kind of break even overall. And there's like the rest, which is like 70% or so, maybe even more, lose money. Your job is to get the edge in your favor and win, and learn from history, learn from Dogecoin, learn from when you've seen these patterns before and going, okay, if you're in a profit, because one of the hardest skills with trading, by the way, is taking profits. It's just one of the hardest skills. Not from a mechanical perspective, more from a psychological perspective, FOMO, fear of missing out, and all that jazz. So let's read this quote from the famous Michael Jordan, chapter 1 of the book. The chapter's name is, "You must be in it to win it." I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Michael Jordan, my friends, and we can learn massive amounts by that. And it's that, what's that other quote? It's fool me once, shame on you. Fool me twice, shame on me. So don't let the markets fool you a second time, because when we see these 5-wave patterns, again, we're probably likely to see it pump to the 0.0002, likely, highly probable. Don't be overly surprised if it shoots past that because of hopium. That is a hopium wave 5. And when there's a lot of news, a lot of noise, and a lot of people have made a lot of gains already, especially when they made a lot of losses already, just be ready to take profits, get risk-free, at least get that money back in your pocket, and just be careful if you're looking to load your bags at the top. Amateurs lose at the top because they buy when you should be selling, and they sell when you really should be buying. So lunacy is a bit of a lunacy right now, but just be on high alert, protect yourselves, acceptable capital exposure, and all the rest. And if you're trading it, tighten your stop losses and make sure you're taking profits as the market moves up, and just be ready for a reasonable correction over the coming weeks.